Hello, first let me introduce myself, Sefiane Chandra. I'm from the Accounting Study Program, and the NPM is 24,412,035. I am doing assignments from the lecture. Mrs. Dr. Tridharma Rosmalasari, SE, MS Act the Accounting Equation Formula. 1. Accounting Equation Formula Structure of the accounting equation assets equals liabilities plus equity assets, resources owned by the company. It consists of current assets, assets expected to be converted into cash within 1 year, such as cash, accounts receivable, and inventory. Non-current assets, long-term assets used in operations, such as buildings, machinery, and vehicles. Intangible assets, non-physical assets, like patents, trademarks, and goodwill. Liabilities, the company's obligations to outside parties. It consists of current liabilities, debts due within 1 year, such as accounts payable and tax obligations. Long-term liabilities, debts due after 1 year, such as bank loans and bonds. Equity, the owner's claim on the company's assets after liabilities are deducted. It consists of forging capital, money invested by the owners or shareholders. Retained earnings, profits not distributed as dividends but reinvested in the business. Example application: suppose a company has assets Rp 200 million, consisting of Rp 120 million in current assets and Rp 80 million in non-current assets liabilities, Rp 100 million, Rp 60 million in current liabilities and Rp 40 million in long-term liabilities. Using the equation, equity equals assets, liabilities equity equals Rp 200 million, Rp 100 million equity equals Rp 100 million. Importance of the accounting equation: accountability ensures that every transaction is recorded accurately and transparently. Performance analysis helps management and investors evaluate company performance through generated financial ratios, such as the current ratio and debt ratio. Decision making facilitates financial planning and strategic decision-making with a clear picture of financial position. Implications for financial statements: this equation forms the basis for preparing financial statements, especially the balance sheet, which shows the company's financial position at a specific point in time. Any imbalance in this equation may indicate errors in recording or managing assets and liabilities. Conclusion: understanding the accounting equation in detail is crucial for various stakeholders to assess the financial health of a company and make informed decisions. 2. Case example of accounting formulas using artificial intelligence. 1. Financial data assets: cash, Rp 50 million; accounts receivable, Rp 30 million; inventory, Rp 20 million; fixed assets, Rp 100 million; liabilities, accounts payable, Rp 40 million; long-term debt, Rp 30 million. 2. Calculate total assets. Total assets of the company are calculated by summing all asset categories, \text total assets equals \text cash, plus \text accounts receivable, plus \text inventory, plus \text fixed assets, \text total assets equals Rp 50 million plus Rp 30 million plus Rp 20 million plus Rp 100 million equals Rp 200 million. 3. Calculate total liabilities. Total liabilities consist of both current and long-term debts, \text total liabilities equals \text accounts payable, plus \text long-term debt, \text total liabilities equals Rp 40 million plus Rp 30 million equals Rp 70 million. 4. Calculate equity. The company's equity can be calculated using the formula \text equity equals \text assets, \text liabilities, \text equity equals Rp 200 million, Rp 70 million equals Rp 130 million. 5. Financial analysis. A. Financial ratios. 1. Current ratio. This measures the company's ability to meet short-term liabilities, crucial for assessing liquidity. \text current ratio equals \text current assets, \text current liabilities, \current assets, cash, Rp 50 million; accounts receivable, Rp 30 million; inventory, Rp 20 million. \text current assets equals Rp 50 million plus Rp 30 million plus Rp 20 million equals Rp 100 million. Current liabilities. This consists solely of accounts payable, which is Rp 40 million. Text current ratio equals frac Rp 100 million Rp 40 million equals 2.5 2. Debt to equity ratio. This measures the proportion of debt compared to equity, providing insights into the company's capital structure. Text debt to equity ratio equals frac text total liabilities text equity text debt to equity ratio equals frac Rp 70 million Rp 130 million approx 0.54 6. Conclusions from the analysis. Financial health. With equity at Rp 130 million and a debt to equity ratio of 0.54, PT Certas Mandiri demonstrates a healthy capital structure. This indicates that the company is primarily financed by equity rather than debt, reducing financial risk. Liquidity. A current ratio of 2.5 shows that the company has sufficient current assets to meet its short-term liabilities. This figure indicates good liquidity, with Rp 2.5 available for every Rp1 of short-term liability. Growth potential. If the company retains earnings and reinvests them, equity can increase, supporting long-term growth without the need for additional debt. 7. Artificial intelligence in financial analysis. Using artificial intelligence, the company can, predictive analysis, utilize historical data to forecast future revenue, expenses, and profits. Anomaly detection. Identify unusual transactions that may indicate errors or fraud. Decision optimization. Provide strategic recommendations based on comprehensive data analysis, aiding in faster and data-driven decision-making. Conclusion. Through a detailed approach using the accounting equation and financial analysis, PT Certas Mandiri can gain a clear picture of its financial health. This approach also demonstrates how artificial intelligence can enhance analysis and decision-making in a dynamic business environment. Okay, thank you all. That's all the material you can explain and convey.